What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream. We're coming into you here on a Saturday, and I've got an incredible guest that's going to tell you why Bitcoin, Ethereum, and all your altcoins are going to zero. Nay, they're going below zero. I'm absolutely joking here. We have the setups, we have the signals, we have different things that we need to pay attention to right now. And this individual that we're about to bring on is one of my favorite analysts in the space. Sometimes when I get hyper bullish, I go and look at his charts and I realize that I'm living in a pipe dream. And other times when I'm hyper bearish, I look at his charts and realize same thing. This is why it's so important to have a variety of different people that you can look to and not have one person giving you an idea, even if it's yourself. We got to build a community of dissenting opinions so we can come to a better conclusion about where these probabilities lie. So everybody stay tuned because we got some charts. We have some signals that you absolutely have to see. And with that being said, my name is Kelly Kellum. Welcome to the BitLab Academy stream. I hope you're all having a wonderful day. I hope you're having a wonderful bull market because, right now we're still in the middle of some things that suggest on the macro sense that things are bullish, but there are some very hairy, uncertain things kind of poking around, and we want to make sure you're prepared. So with that being said, let me throw it to my main guy. Well, before we do that, hit that like button, hit that subscribe button, and ding the bell, whether you're watching here on Twitter or on YouTube. I appreciate you, and we're all going to rise our ships together. We just got to figure out at what points we need to be patient, at what points we need to take action. So with that, Mr. Jesse Olson, the man with the plan, how you doing, sir?
What's up, Kelly? Always the best introductions. Good to be back on here. It's been a while, just like we said off camera. We haven't been on since I've had a newborn. So 10 weeks ago, first child, 45 years old. I'm an old dad, old dad. And I feel it.
Well, I
But
love
we're
it,
on
man.
this.
Go
Yeah,
ahead.
sorry. We're on this makeshift. I'm downstairs. The baby kicked me out of my office. And so I moved the office over to the master bedroom, but I couldn't find my virtual background. So I moved it down to the living room. And here we are. So I'm holding the mic. I'll put the mic down. You can hear it good enough without it. But just want to let you know why we're on the makeshift living room right now.
No, it's all good. But, you speak to something that is very important in these markets, especially for a lot of people that are out there aspiring to be traders. Some people don't realize that they're actually more investor oriented, but they get into thinking they need to trade every move. But the whole point about this is adaptability. And one of the things I do like about these markets, the more we move into it, if it's on a professional level, trading, investing, or if it becomes more of a focus of our life, you can't always I have my background right now, but I'm on the go. I have to travel and do things, and that's what we're doing here. So let's just jump right in. Everybody, if you are tuned in right now, before we get going, I do want to just shout out, make sure you're following Jesse Olson's page, which is right here at JESSEOLSON. And I like to spell these out because there's so many damn fake profiles out there. Make sure you're following the right. He drops alpha on a daily basis on crypto and on markets. But with that being said, Jesse, what are you looking at right now? Is there reason to fear or is there reason to hope? And on what time frames are you putting those contexts in?
Well, I don't know if fear is the word I use for my own personal self because I feel like there's an opportunity in every market, whether it's up or down. I'm always looking for the next opportunity. So for me, I don't really I don't really feel the fear because if you start getting too emotional, whether it's fear of missing out to the upside, fear that Bitcoin's going to go to 1 million without you, fear that's going to go to zero. I know you were kidding about it earlier, but some people really fear about it going to zero. And the reality is it's somewhere in between, right? And that's kind of like that neutral swing trader mentality you have to have is that, hey, it's not up only forever and it's not down only forever. So one of the key charts that I've been posting since June and July is the 2-week chart. So the last one I even posted was August 10th. You can find it on Twitter X app, just like you said. But this is the weekly chart. But if you go to the 2-week chart on Bitcoin, this is the weekly chart. You can see that lower highs are getting put in and lower lows as well. This last lower high is not confirmed yet until it takes out this pivot point, but it's trending that way. So as of right now, as the trend that we see on the weekly chart, the 2-week chart, right? The trend is going down versus up. So that's the overall view. And one of the things I wanted to point out was the 2-week chart on Bitcoin RSI. So I posted this one back on August 10th, and you can see that the RSI sell signal on the 2-week chart doesn't happen very often. So you can see that the last sell signal on Bitcoin 2-week chart is June 17th, right? So June 17th was the 2-week candle close. And the last buy signal before that was February 2023. So it doesn't happen very often. And of course, it was followed by bullish divergence. And if you look at the previous last RSI sell signal was April 2021. So like I said, it doesn't happen very often. And the reason why I was pointing that out is because if you look at the 2-week chart, so you got the RSI sell signal in April 2021. Not only did it come all the way down to the trending dots, but eventually came all the way back down to the 200-week moving average, right? So you can see that over here. I think on the screen, you see my cursor hit the 200-week moving average. Doesn't mean that there wasn't an epic bounce first and even possibly put in a higher high, right? So that is a possibility still. But after all the indicators that we're looking at in these higher time frames, we're seeing not only did it come back to the trending dots, which it did again, it ended up coming back to the 200-week moving average. And you can see it a little bit better on this exchange. This is Bitstamp. It's got more data behind it, but came back and retested it. So will Bitcoin, after it had an RSI sell signal, not only come back and retest the trending dots? It did. Will it come back down and retest the 200-week moving average? And then you can move to the 3-week chart as well. And if you look at the 3-week chart, again, you have RSI sell signal May 2021. Yes, it came down, had that epic bounce, put in the bearish divergence. Then the RSI buy signal March 2023. And then RSI sell signal on this last 3-week candle close. And now it's back below the trending dots. So there are several reasons why it's possible that we see much lower prices. There's never magic. We don't have a magic crystal ball, so there's never a guarantee. But we do have these longer term targets mapped out. 2 of the 4 targets have been hit so far. And, the probabilities are increasing that we're going to at least retest target 2. Obviously, it's heading that way. And then, of course, the probabilities are increasing that we're going to hit target 3. We don't know about the 200-week moving average, and we don't know about target 4 yet. These are higher time frames, so they do take a while for them to play out. Just as we saw in 2021, where you had that RSI 2-week sell signal and 3-week sell signal, and it still had that epic bounce. And I played that bounce with leverage long from July 2021 to November 2021. So even though the longer term was trending downward on the RSI sell signals, I still played a swing trade, multiple swing trades to the upside with Bitcoin leverage 10x back in July, and then again in September all the way to November. So there's still opportunities, and we could still possibly see some epic bounces, but the overall longer term trend is trending downward.
Yeah, I mean, so many good points there. And it's like, it's interesting. I didn't even realize that 200 moving average was there at that 38, 39, $40,000 region, because just on a simple bottom of the market fib to the top, that's right about that's just below where the golden pocket is in that area too. So some people would feel like the bull trend is fully over because it came down there. And in reality, it's kind of scary to realize on a sort of healthy basis, that wouldn't be something out of context. And now, curious there, everybody was, not everybody, the majority of people were starting to feel like this market cycle is different because now we have institutions, corporations, big money, blah, 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 all the things that substantiate the bullish bias. And we overshot the breaking previous all-time high prior to the halving. And so, and we had only had 18 to 21% pullbacks, and it got to the point where I think people got complacent. And then now what are we doing? We're getting that, I wouldn't even call it a deviation to the downside. It's more like, it's kind of like balancing of the scales. Everybody's so bullish, let's bring it back down. Because as one of the things I say on here regularly, and I stole it from a friend of mine, Tim Warren, When retail misses a boat, you've missed the boat. When institutions and corporations, especially ones like BlackRock and Fidelity, miss the boat, they don't. They bring the boat back, or they even hold it at the dock longer than you can imagine. So the fact that institutions are on the horizon right now, just now starting to come in, the fact that we have investment advisors just starting to push those products, actually gives me a little bit of bearish bias in that they're not ready for this to run away yet. And we're not seeing, with all the economic data, lack of savings, or the exponential delinquencies and bankruptcies and debt and all this kind of stuff. Where's the money in retail going to come into buoy? It's not. Right now, it's institutional and big money driven by triggering those short-term holders' fear.
So I have two. So if you have the bullish case for me is that I agree with you 100% that we had it was overextended, right? So and that this is just a simple retracement of that, because never before have we seen before the halving coming up and retesting new all-time highs. So it was overextended, it was overbought, there's divergences. So this time in a normal, quote unquote, normal cycle, you would see that price comes up to about maybe 48 to 50,000, and then comes back to the 200-week moving average, and then goes on its massive run typically. And doesn't mean every cycle is going to play out the same way forever. And this cycle is different, like you said. A lot of it was probably the ETF. A lot of it was institutions being able to buy now. And now it's like you pull a rubber band too far to the right, and when you let it go, not only does it come back to the middle, which would be like target 2, target 3, sometimes it goes in the other direction, which it might not even have a deviation to the downside, like you said, and then come back and hit target 3, target 4, maybe even below 200-week moving average like it did March 2020. So the bullish case is that it was overextended. You get a healthy retracement to target 2 or 3, doesn't hit the 200-week moving average yet, and then takes off. The more bearish case, something that I talked about back in July and August, and I've been talking about this for Bitcoin since 2020 and 2021, is if there is an overall bigger market crash, and we can look at the NASDAQ too, say the NASDAQ and stuff, Bitcoin is not a flight to safety yet, in my opinion, right? I know there's a lot of talking heads out there. It's flight to safety, it's gold, blah, blah, blah. Even gold will have corrections in a bigger overall correction temporarily. And then, of course, maybe it's lesser to the downside with gold, and then it bounces faster and doesn't go as deep as some of these higher risks. But Bitcoin is still considered, in my opinion, a higher risk asset, similar to tech stocks. And because it is a technology, and so it's similar to the NASDAQ too. So if NASDAQ were to have a 30% correction, I would expect Bitcoin to also have a bigger correction of 60, 70%. And that would be the more bearish case. And so keeping an eye on the NASDAQ, which I pointed out a few months ago, also had bearish divergence. Also looked like it's putting in a lower high. Also, the 2-week chart had an R-size sell signal, I believe. So all things considered, Bitcoin is not a flight to safety yet. Maybe it will be one day. And even if it does become a flight to safety eventually, then gold is also known as a flight to safety, and it still has major corrections. So just keeping that in mind, be careful of all the talking heads and all the narratives and noise out there, and just trust the charts, really.
I mean, you said it beautifully. I actually said those almost exact words here on the BitLab stream earlier this week, that I think there's a lot of speculation. There's a lot of speculation around the hope that the ideal circumstance in the future of this flight to safety, the hedge against all things. But the fact that, I mean, this is still a very early space. We had the early adopters, which is basically at this point everybody up until January 10th. Of this year, but prior to the Bitcoin spot ETF. But we just entered that next phase of early adoption, which is the regulated side with institutions, corporations, and big money. Now that there's at least 14 years of data, and we're getting some sort of regulatory clarity and sort of stamp of approval that it's an okay asset to trade. Now, is it going to be a flight to safety? It's still a speculation, but I think it's still trading, as you said, it's still trading directly in the risk narrative. This is why when the dollar falls, Bitcoin goes up, and when the dollar goes up, Bitcoin goes down, because it's in that risk narrative.
Yeah. So here's the thing. It's like once paper Bitcoin was created, similar to gold, paper gold, it's going to be a trader's market, right? So if gold had only had spot gold forever, then there's no way to manipulate it. You can't sell short against it. And maybe gold would be worth $15,000 today, but paper gold was built and there are derivatives of gold. And paper Bitcoin was created in 2017 or earlier with the futures, and then there are other ETFs other than the US ETFs. So paper Bitcoin has been created as well. So that means that you can buy and sell Bitcoin and gold with leverage, which is amazing for swing trading. But if you're just a hodler, there are going to be big swings to the downside still and for the foreseeable future, because even if it was a flight to safety, there's so much leverage out there for gold and Bitcoin every single day. I think it's like 270 million ounces of gold is traded every day in the futures market, every day. So imagine as Bitcoin gets older, yeah, maybe it'll be a little bit lesser to the downside. Maybe it'll be a little bit lesser to the upside, but there's still going to be some wild swings to take advantage of because, and you see me get excited because I'm a swing trader. So maybe not great for hodlers all the time, but for swing traders, I think there's going to be a lot of opportunities because paper Bitcoin was created. And like you said, it's only been around since 2008. Institutions been around 100, 150 years, 50 years minimum probably to be institution. So that they're going to be allowing with the paper Bitcoin and paper gold and stuff like that to maybe it'd be a flight to safety, but I think it's more of I think it's better for like swing trading. So there's a lot of great opportunities in the future that I'm excited about.
Yeah, no, for sure. I do remember, you've been on my when I had the Crypto Answered podcast on Twitter Spaces. You and I talked a lot. You've also been here on BitLab before, and you actually brought up some things that I had never really looked at, and this is why it's so great to talk to different people in the space with different lenses on the market. You had brought up things like basically using, for instance, Bitcoin mining stocks and other sort of Bitcoin proxies in the traditional market as also potential leading indicator or sort of market health sort of check. Are you looking at any of those charts now, Mara or CleanSpark or Coin on Coinbase or anything like that? Or are you just letting the Bitcoin chart talk for itself?
Yeah, I've been watching those, and so they kind of played out like Bitcoin has in the past, right? Where right around the halving and stuff, they never made a new all time high. So the Bitcoin mining stocks are still behaving more like previous halvings. So you have, all of them, not all of them, a lot of them spiked to like, either one longer term target to the upside, two, and even three. I don't think any of them spiked and hit all four targets to the upside. Uh, but a lot of them were like target one, two, or three, and now they're coming all the way back down. Right? They've been bearish for weeks, if not months, already, and they spike up and hit little targets here and there. But one of the big things that I kind of noticed was when Bitcoin mining stocks are truly pumping and possibly making new all-time highs. That's usually towards the end of the bull run. So going back to everything, it just seems like this if this was like the old previous cycles, uh, we got a gift that Bitcoin actually pumped higher and made a new all-time high before the halving, because normally it would only be to like $50,000 like in the past. So if you got a gift that it went even higher than what you could hope for before going into the actual full bull run. So since it went higher, maybe it retraces more and lines up with more of a NASDAQ correction. And then maybe it takes a little bit longer, but, still heading into end of 2024, 2025, maybe we start to see it after it kind of bottoms out, make a true bull run after that later in the game. So I don't know. I'm excited, even if it goes lower. Like it would be a good time to buy the next buy the dip, the true one. But waiting, not picking every single bottom all the way down is key because you'll go broke and you won't have any real money to buy the dip. if you're buying the dip all the way down. So waiting for a higher probability reversal is what I would be doing. And in the meantime, unfortunately, a lot of people don't like to hear this, but I am shorting the bounces in the meantime. So take advantage of the market to the upside and take advantage of the downside. So,
Well, let's see what you're looking at in terms of Ethereum. Are you following that chart at all? Or are you kind of waiting
yeah,
for Bitcoin to define what the next trend is?
no, definitely always watching Ethereum. Is this whole watch list, Bitcoin and crypto, all the way to right here on the right side. You can kind of see all the ones I follow them probably the most. But yeah, Ethereum, what I've been talking about is that it's actually kind of led the way and already retested the 200-week moving average, right? And Ethereum lines up with exactly what we're kind of talking about, where Bitcoin would normally probably have, maybe just retrace back up into this area, exactly like Ethereum did before the halving. Never made a new all-time high, didn't get caught up in the ETF news, right? And did that retracement from all-time highs and has now already come back to the 200-week moving average. So very similar to what Bitcoin, maybe Bitcoin would have only come to this area like that 48 to 50,000 area itself, but with that ETF news, the hype did get pushed up even higher. And so when you look at Ethereum, it played out exactly how Bitcoin has played out in the past. Huge top up here at 48.56, came all the way down, retraced all that move, comes back down the 200-week moving average, finds support, and then makes that next bull run heading into, maybe 2025 again. So it'll be interesting to see if it plays out like that. Again, there is a caution, right? The caution is if the overall NASDAQ market is correcting, then I'm always going to lean, coming from the options world before I got into crypto, I'm always going to lean towards if the NASDAQ and overall tech stocks are going through a deeper correction, that's going to outweigh the cycles, in my personal opinion, or at least delay the cycle. So I weigh that heavier than I do the actual cycles itself. In the short term, right? Longer term, it could in the shorter term it can be a deviation to the downside. In the longer term, usually catches up, like March 2020 was that deviation to the downside. The market was crashing, Bitcoin deviated to the downside in my opinion, and then it took a little bit longer to catch up, and maybe that impacted why Bitcoin never hit $100,000. That's my own speculation. Obviously, none of this is financial advice. Obviously, it's for educational purposes only, and hopefully we have some fun with Kelly Kellum along the way.
Yeah.
So that's my thoughts on it.
Well, no, I mean, I couldn't agree more with everything you're saying. I do recognize in myself that I definitely have a bullish bias, but I think the macro bullishness of Bitcoin and Ethereum first, and then potentially the altcoins in the near future. But that's going to be after Bitcoin and Ethereum actually start to show some resounding actual agreement by bulls defending areas and pushing up and having volume, all the things. But I do think in the near term, I did a whole video this morning on the street on that regarding um, this. There's so much weird. There's a confluence right now of different economic, financial, cultural, and I don't even want to say the other word because it demonetizes us here. But that big event that we're having in November, it's all sort of coming into the point right now where we're also going to get rate cuts, right? Are we going to get rate cuts? What's your thoughts on that? Because there's this debate where some people echo, we get rate cuts, that means the market's going to crash. Other people say it's only 50-50. Do you think that that coupled with the fact that there is no real money out there unless there's some sort of stimulus again, we are in a very different landscape than we have been going into a potential bull cycle. So how do we weigh all this with all these dates coming up and all these things compounding this level of uncertainty? Do you think we're still going to have a very strong bull run in 2025? Do you think it may be delayed longer than people think? Or do you think this could buck everybody's uncertainty and just break out without people really seeing how the data could get it there?
Yeah, it's hard to sift through all the narratives out there because there are so many, and people will scream into the microphone one way or the other, ultra bullish or ultra bearish. So trying to stay neutral and sift through all the data and people talking and stuff like that, you got to just trust the charts at number one. But to your point, is there are a lot of reasons why we could see. I don't, can you say the R word on here? Economic R word.
Yeah, yeah. The
Yeah,
session
recession.
that starts with re. Yeah, I got you.
Yeah, yeah, yeah. I don't know if you could say that, but I know what you're talking about for November. But so we won't go down that way. And I don't like the P word, anyways. I hate it actually. So, but there are a lot of reasons why you could argue that we're already in a recession or that we're heading to recession. Whatever the numbers may or may not be, uh, you know, skewed, right? So you could get into all that, but if you go down all the economic charts, they don't look great. If you just look at the charts itself, they don't look great. So keeping that in mind and keeping the rate cuts in mind, if you go back to the charts again, like everything to me leads back to the charts. Even if you look at the rate cuts and charts, uh, not always, but sometimes you will see that the market already started correcting before they had a rate cut. And the rate cut's kind of like the hindsight crew instead of the foresight crew. So like the foresight crew would be like, us looking at charts and seeing bearish divergence, right? That's foresight. You're seeing, hey, there could potentially be a market change. That's you. That's me. We're looking at charts. We're seeing bearish divergence. It's like, hey, it hasn't started crashing yet, but there are some warning signs. It's overbought. There's bearish divergence, blah, 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 blah. Then you got the hindsight crew who call up black swans, whatever, for whatever reason, March 2020, all that stuff. And the black swans are, we didn't see this coming. We didn't see the divergences. We didn't see the market was overbought. We didn't see that economic data doesn't look great, whether it's jobs, whether it's, bankruptcies, like you mentioned, court, business debt, personal debt. I mean, you could go down the list and it looks a lot like doom and gloom. So you just have to be careful. You have to stay neutral, even with all that negative, because what if you miss that next bull? There was a lot of negative sentiment in November 2022 and December 2022. And we started calling out bullish divergence November, December 2022, and then taking our first leveraged Bitcoin buys at 16,800. If you remember back then, which I know you do, because we were doing a lot of your crypto answered shows, that there was a lot of bearish sentiment. And so the only way we could take a $16,800 Bitcoin leverage long is by staying neutral, right? We just had all the meltdown in crypto. And if you would have been so bearish, which understandably, you would have missed that epic bounce to what, $74,000 Bitcoin, right? So, and now that it's getting more bearish, maybe you don't lock in profits, right? So that's why you really have to stay neutral at all times. You have to know the data that's out there, negative and positive, but then filter through it what you're actually seeing on the charts and do your very best to stay neutral. That's the only way to survive and even thrive as a swing trader. So,
Yeah, no, I mean, I agree with you. I pulled up the chart while you were talking about that period when the FTX collapsed, which I'm highlighting here on the charts. That was scary, but anybody that was looking at the data, there was, I mean, mounting bullish pressure underlying that was going all the way, I mean, for 5 months ahead of that. I mean, you couldn't notice it back here in June, but as you allowed the price action to work its way lower and you see the MACD trending up, you see the bullish divergence on the RSI, bullish divergence on stochastics, bullish divergence on money flow starting to flip positive. They were starting
yep.
to see signals, and none of this was the trigger, because that all of us would have bought in down here at $15,500. It was even your indicator system, which I love, but allowing the break above, allowing that, trying to front run this right here, or even waiting and capturing that first higher low. That was still, some people felt like they missed the move. But I mean, if you look at this, everybody, I want you to realize this. If you missed this, okay, say you see it higher high there, higher low, and you took this breakout, maybe say right there, that still would have been a 235% gain to that next regional market cycle top. And it's just about patience, man. It's just about patience and being prepared and not being tied to a bias. The chart will tell you what's building.
Yeah, and so your point exactly. I didn't buy the bottom wick of Bitcoin at 15,500 or whatever it was. Otherwise, I would have bought the bottom wick at 30,000, 40,000, 50,000. It's okay, the wick could be the bottom, but now I'm going to wait for a higher probability reversal. So 40,000 wasn't the bottom, 30,000 wasn't the bottom, 20,000, 15,500 turns out to be the bottom. But waiting for a higher probability reversal, I still got in at 16,800. So the goal isn't to catch the bottom wick, because you're going to lose multiple times picking bottoms or picking tops. But once you wait for a higher probability reversal, my goal is the bottom minus 5 to 8%, and the top is minus 5 to 8%. So the reversals coming in, if I catch if I miss 5 to 8% of the top move, I nailed my goal. So if you miss 5 to 8% at the top and 5 to 8% at the bottom with a higher probability of a reversal, then you're still capturing 80 to 90% of the entire move. And that's what I care about. Building those probabilities, the reversals, waiting patiently, and taking less trades. And by doing so, you're not picking the bottom or having to DCA all the way down the 2022 market and then having to wait for it to get back up to 40 or 50,000 just to break even. It's not my strategy whatsoever. I would rather wait, and then Bitcoin, thankfully, and many other assets do too, always, or not always, most of the time gives us divergences, whether it's on RSI, MACD, just like you said, CMF, everything. You can spot divergences, and thankfully, from a swing trader, it continues to give us divergences because it makes it so much better. Then that higher low is the higher probability that the bottom is in. So
Yeah, I agree with that. I mean, I've been holding you hostage here on Saturday for all of you that are watching. I'm going to sort of twist Jesse's arm here for just a second before we go. Other than Bitcoin and Ethereum, are there any other charts? It could be a stock, could be an altcoin or two. Just give us a little 3 minute, 4 minute rundown on a couple things that you're watching or you think people should be paying attention to.
yeah, let's just run down. You can see I labeled the Magnificent Seven, but then I've added just for this uh, for the purposes of the to keep the live stream or not the live stream, the video going full steam ahead. You've got the Nasdaq over here, right? This is a 2 week chart. It was overbought. There's bearish divergence. The indicator is not picking it up this time because you have to probably change the settings. But there is bearish divergence on the 2 week chart for the Nasdaq. It's overbought and a reversal candle, right? This is potentially a lower high. You can even see it over here on RSI, a possible lower high. So if that's the case, when that's happened in the past, similar to exactly what I just talked about on Bitcoin, you can see over here bearish divergence on the Nasdaq, followed by an RSI sell signal on the 2 week chart and a reversal candle. So bearish divergence, reversal candle, RSI sell signal. Price came all the way back down the 200-week moving average. It's overextended again. You got bearish divergence right here. You got the reverse candle, and you got another RSI sell signal. So again, if the overall market, NASDAQ, SP 500, all that stuff is trending downward and is going to go back to the 200-week moving average. Ethereum's already gone back to the 200-week moving average. It seems like Bitcoin will also be trending back to the 200-week moving average. And of course, a lot of these Magnificent Seven stocks could be as well. So if so, could we go to the moon with Bitcoin? Sure. But with all this said, not to mention the economic, all that stuff, it seems like the overall probabilities are that we're going to go lower first based off these higher time frames trending downward. And so that's what I'm watching right now in the Nasdaq. And complete disclosure, not that you care, but I've built my short positions on futures for the stock too, and even SPY puts. So I put my money where my mouth is, and I bet on it. So whether the market's up or down, do your best to sniper the markets and take advantage of what the market actually gives you, right?
I mean, I agree. This is a chart right here with S&P 500 and Bitcoin. I don't know if you can see. Let me shrink
Yeah.
this just a touch. There, can we see it yet? There we go. The thing that I'm looking at, just very similar to what you were talking about, is the fact that the S&P 500 was pushing up so aggressively here, and Bitcoin was trading sideways, which isn't the worst thing in the world. It was trying to contend with breaking through two major previous all-time highs. But the fact that we had this basically buoyed by risk coming into the market and Bitcoin only sustaining a range, having this sort of V-shaped recovery, it kind of looks similar to this, but my question is, what's going to give us that next leg up? If this does break down, there's nothing really in the risk market to really buoy this any further. And the longer the bulls can't make a run upward, the stronger the bears get. And that's when we get that dramatic move. Dramatic for those that aren't prepared. So, I mean, I love all the charts you shared. I love all your sentiments. Of course, as an inner bull, I'm so frustrated. But at the end of the day, this market moves faster than almost any market out there. It just takes some patience. So, Jesse Olson, I appreciate you coming on. Is there any closing words or any other special places people should go and find you other than on your Twitter? I know you have at Market Sniper Pro as well, and youtube.com/Jesse Olson C. What's the C for? Jesse Olson. Jesse Olson INC. Make sure you're following that. But you got anything else coming up or anything else you wanted to share as we wrap out on this wonderful Saturday where the market's still giving us opportunity?
No, I mean, that's about it. I always appreciate you on here. And anytime someone's always asking for like the super host, I always give them your name. You know that. I've even messaged you privately that I think you're the best host out there. So I'm always saying yes to you. I say no to probably 95% or more. So, but I always say yes to you because I think you're such a good host, and I always love your work and what you're doing, and consider you a friend and all that stuff. So, cyber friend, we've never met in person, but one day, hopefully, we change that. Maybe when the baby's a little bit older, we'll take a trip, or the next Bitcoin conference. The baby will be at least a year. But off camera, we got a couple questions for you about Nashville. I went there recently for my baby shower too, so we'll keep that off the screen. But with that, thanks as always, Kelly. I appreciate it. Hope you have a good rest of your weekend, and shout out to all your people, all your viewers out there too.
I appreciate it so much. And again, I think of you as a friend too, as well. And I also love how balanced you are looking at these markets. And with that, everybody, make sure you're following Jesse Olson and make sure you hit that like button, hit that subscribe button, ding the bell. I hate saying that, but these algorithms, we're fighting mainstream media. If you enjoy this type of content, you have no idea how much it does impact when you do just engage on a minimum level. And letting these different systems know that you like this content. So everybody, have a wonderful day. That's all we got. Over and out, and I'll see you in the next video. Adios, everybody.